I mean, this is a huge fund, $820 million. I mean, what's the strategy? What will you be focusing on? Will it be on enterprise software, health tech, mobility? What is it?
No, it's great to be speaking again. We're focused here on the Series B to D stage of investing. And so what that really means is we're looking at companies that have found product market fit. And where we come in is helping them scale to the next level. So that's kind of a focus area from a company standpoint. Typical investment size is $10 million to $60 million. What we're really looking for are founders and teams that are going after really large market opportunities. So that's where tech is shaping large traditional industries like financial services, that's banking and insurance, healthcare, transportation, logistics. And we really look for companies that are taking a global first approach to scaling up their businesses.
So what's the most exciting thing out there? What are some of the brightest spots in terms of tech investing?
You know, at some level, you have to look at things in the context of cycles and where things stand. I think one, at the most macro level, you're seeing tech show strong resilience. If you look at just the public markets from Jan to June, and look at some of the shareholder returns data, software and tech has been the second best performing sector, so it's showing resilience. But I think more importantly, we're spending time looking at just companies and observing how they're doing. I think a few trends emerging. I think businesses and business models in tech that are capital efficient, doing much better. Teams like SaaS, so that's software as a service, and kind of businesses, again, the leading companies are surviving and kind of showing strong resilience. I think businesses which have been cash guzzling, I think those will face challenges and headwinds. But you really have to de-average the view, look at the next level, look at where software is being sold, if it's being sold into areas like pharma, into governments, doing quite well. But of course, if it's businesses and companies selling into areas like airlines, travel and hospitality, those clearly are sectors that have got impaired. And so we'll have a very different lens of how things go.
And Kabir, it's Yvonne in Hong Kong. Thanks so much for joining us. I read recently that you are also telling your portfolio companies, at least advising them, that now is the time for some M&A. Tell us why. Is it because of the lack of the IPO options out there?
You know, as looking at some of the data of the last 40 years on how companies have adapted to crisis, and this is literally several recessions, but also kind of different crises over the last kind of 4 decades. And some of the big learnings are you've got to almost take a multi-time view of things. So the first part is showing resilience in the now, and part of that is thinking about the business models, thinking about how do you transform some of the processes. But a big part of it is rebounding and preparing how you rebound from this current crisis. And some of that is, yes, it is around if you're well positioned, can you acquire? Can you think about acquisition of talent? Can you think about companies that you may want to keep on the radar screen? You may not have to do it immediately, but we are encouraging portfolio companies to look at that quite closely. So at least they're prepared to really kind of bounce on the opportunity once things rebound, which of course will take time.
Are you going to see more consolidation in the space then? I mean, there's a lot of questions about consolidation in the e-commerce space in Southeast Asia, for example. How do you view it?
You know, I think our view has always been, part of tech is about backing the number one player. That's been a big part of our philosophy in kind of Fund 1 as well, and that continues in Fund 2. I think on your question on e-commerce, I think there are 2 parts to it. One, if you just look at traditional e-commerce, that's across US, China, India, Southeast Asia, it does become one where 1 or 2 players really kind of emerge, or 2, 3 players emerge and become strong. I think for us as a fund, we've been a big believers on saying let's back more capital efficient businesses, so the enablers of e-commerce. If you look at our portfolio, and that will continue in Fund 2 as well, is a lot of the focus on enablers. So backing the leading logistics players, backing the leading payments companies. And there we see there's actually a multi-year structural growth ahead. You're looking at the last data of again, even in the internet economy in Southeast Asia, it's gone from 30 billion to about $100 billion. So that's 3x growth in 4 years. We expect that 100 billion, that number to go to about $300 billion in the next kind of 3 to 4 years. And a big part is, do you have the right plumbing in place to really support that ecosystem? And so we think that just a multi-year, not just a 5-year view, but a 10, 15-year view for companies that can enable commerce more broadly.
Kabir, recently we saw India ban 59 Chinese apps. How should global tech companies navigate geopolitics across the region, across the world?
No, it's a good question. I think, right now is a time for, it's time for investors, the ecosystem, for companies to just observe what's going on. There are just so many there's so many macro trends happening. We just look at last 2-3 months. You've just had an oil price shock. You've had a health pandemic. There's geopolitical tension. I think part of it is just demarcating between what's happening in the short term, but what's going to happen in the long term. And so a big philosophy that we have is really looking about long-term businesses, business models that will going to survive in the long term. And so, who knows what will happen in the next month, 2 months, or 3 months. But a big part when we're selecting and screening is to look at patterns kind of globally to see which of these is going to just be stronger and emerge for not just the next quarter or 2 quarters, but just kind of the longer term. So I'd say it is going to be choppy in the short term. It is going to be uncertain in the short term. The key is for us as investors to kind of pick businesses that are going to survive and thrive in the next 5, 10, 15 years. And we encourage our founders and management teams to also say, look beyond just the next month or 2 months to kind of make the most of the opportunity. But it's hard to predict. I think the reality is it is uncertain. And there are just a lot of these overall wins that one needs to kind of be observing and adapting to rapidly.
Kabir, earlier you talked about how you're advising your companies to pursue M&As. Are you also getting them to grow as much as possible, be as profitable as possible, given what we saw with SoftBank and WeWork?
For us, the philosophy had always been about focusing on companies which have strong unit economics. So even in 2016, 2017, 2018, when we were investing in Fund 1, it was really about unit economics, path to profitability. When we spoke last, we spoke a lot about the whole private equity view to kind of venture investing. And so that's been ingrained in our philosophy. With that philosophy, that's, again, with Fund 2, no change, where we are looking for businesses that are capital efficient. And if you back companies, so again, one of the themes we back quite heavily is global SaaS. Those are very efficient businesses. And so if you back strong business models which have unit economics nailed and grow in an efficient way, I think for the number one player, it is going to be an interesting time. For business models which are cash guzzling, I think it's going to be a hard time. For business models where unit economics were not fully working out, it is going to be a hard time. Capital will be harder, more scarce. And I think it's also a wake-up call for the ecosystem to really fix some of the business models and to focus on some of these fundamentals of kind of running a business. So in a way, it's a good thing that's going to happen in the next few years. Again, looking at the stats in the last 4 years, even in Southeast Asia, you had about $36 billion that was invested into VC and private equity-backed tech companies. And so we expect, while the amount of investments may kind of taper down a bit, you'd expect more capital efficiency from businesses in the next 12, 18, 24 months.